This page is from the workbook Women of Wall Street Trading Planner, and it's the page about rules. So we're just going to talk about it today, and you can fill it in for yourself. And if you don't have it yet, go ahead and buy the workbook, and you can follow along with the future videos. Hi guys, you want to make some rules. Rules for what a good stock is. When do you buy it? When do you sell it? So what is a good stock? You need to decide that for yourself. Everybody's going to be different. There's no right or wrong. You need to use good judgment. So let's say that a good stock for me, some of my rules are I want to see cash having grown year over year, or at least from last year. With everybody talking about a recession, I don't want a stock that has a lot of debt. So growth is also something that I look at. So I'm looking at some technicals. I'm looking at earning reports. Also, you need to know when it is a good time to sell a stock. So make some rules for that. Stop losses. You'll want to set them up by industry, not just overall. If anything drops by, 7%. Some industries can handle larger percentage drops, and they bounce back and they do great for me. So I have a few rules for myself. Anything shipping related that falls below 9%, I'll sell it. Finance sector, if it drops below 25%, I will sell it. Consumer discretionary is about 7%. That's a good time for me to sell. I'd rather sell things and then get into other stocks that I want rather than watching things drop too low. Decide what a good business model is for you and research your companies. If it's overbought, that's another rule for me. So I need to look at when to sell it. Underbought is an opportunity. I might want to buy that. Don't sell fractional shares unless there's a whole share left. Or like this, on 1/4/24, I decided sell off on banks if it gets down to 25%. That's my stop loss. REITs are at 7%. All good stock traders manage their risk. You need to decide what is risky to you. What is your value system around it, and how much you're willing to risk in different variables. When will you be in the market, and when will you be out of the market? How much of a stock to buy at a time? How many shares of something you'll buy at a time, or what percentage you're willing to hold for different stocks. Are you going to have the 7% rule? Nothing over, you buy up to 7% of each stock or 1%. What I did in the beginning was I looked at all of the ETFs that were holding a particular stock. And when that ETF, I started with the highest one. So let's say I'm looking at Apple, go down to the ETFs. This ETF holds the most. So I opened it up and I saw, was that a smart choice? Did Apple make them money? And then their overall outlook on the ETF, are they consistently making money? Do they make good choices? So if you want to defer to somebody else's decision making, there's tons of ETFs. There's all of these ETFs that have already been playing these stocks for quite some time. I look there. So if it's doing great, I'll go with that. If not, then I just cross that number out and I go down to the next percentage. And I chose that way. And then this became such a great strategy that doubling it actually made a lot of sense. I was able to track that and see that was growing me a lot of money. So